Congratulations, you have begun your education on sound money. So I want to put it to you this way. Picture yourself on a riverbank. The floodgates open and trillions of fiat dollars surge downstream. Prices are swept away, purchasing power eroded, the ground beneath you unstable. Yet gold and silver rise above the torrent, solid, immovable, immune. While paper currency is carried off, these metals give you firm footing. The call is simple. Shift your paradigm. Climb to the high ground of sound money that cannot be inflated away and safeguard both your wealth and your freedom. Now I'm going to give you some of that background so you understand it. Because when money was first created and sound money was used, well, we had a very strong foundation. These are the 4 pillars of money. This is the way it was sold to the public in the beginning, as a unit of account so that you can measure, as a medium of exchange for barter, as a fair unit of payment for fair payment today, and as a long-term store of value so that no matter when you use this money, you were always fairly paid for the labor that originally created it. Only gold meets all of these requirements, though many things have been tried. And what gold in the system actually does is it forces governments to have fiscal responsibility. What a concept. And it protects your purchasing power. But governments like to tax and spend, and so they put inflation into the system, and they created fiat money. And that fiat money mimics all of those other attributes of the fair money, sound money, except for the inflation piece. And that is by design.
Money was never meant to be fragile. At its foundation, sound money serves 4 essential functions: a unit of account, a medium of exchange, a standard of deferred payment, and a reliable store of value. Most systems meet 3 of these requirements. Briefly, only gold has historically fulfilled all 4 over long periods. Its scarcity enforces discipline, it limits reckless spending, and restrains governments from inflating away obligations. Fiat currencies imitate sound money's appearance, but not its integrity. Inflation is not an accident, it is a feature, one designed to quietly transfer wealth over time.
Jim, we saw a phenomenal year last year, 2025, with the way precious metals moved up, gold, silver, and platinum. I just want to know your take on the speed of the rise of the metals that we saw last year. Was it something you've seen before?
I don't know if it's normal or not, but it's happened many times in history. 30 or 40 years ago, silver went to $50, 50 US dollars per ounce. It was a shock to people. It's over 50. Again, it's now making new all-time highs. This has happened in the past. Gold and silver have always been refuges for people when they get worried. And they have been for hundreds of years. I presume they will continue to be. Don't sell your gold. Don't sell your silver.
I think what caught a lot of people off guard, I'll just use that word, was the speed. And a lot of people are still wondering what was the driver behind the speed of it? Was it geopolitical things happening? Was it a deficit in the material?
Patrick, the thing about things, whatever it is, gold or silver, whatever it is, pressures build up. And then suddenly when pressure is released, it's a lot of speed, people think. But it's because the pressures, the underlying pressures, whatever it is building up for a while, and then it gets released. That's what we saw with gold and silver again. It's happened before. I hope we live long enough to see it many times in our lifetimes. It has certainly happened many times in history, and it will happen again.
Well, we came into 2026, and first month of the year, January 30th, we saw the metals prices really take a hit. Silver lost some 30%. What was on your mind when you seen it fall?
Oh, I rushed down and bought some more.
Rushed down and bought some more.
Yes.
That's an interesting answer you gave, because we're seeing dealers here now in Singapore. They're requiring a $5,000 minimum purchase.
I guess it's because they know there's a lot of demand coming and they want to exploit it. I mean, dealers are smart, usually, historically, so they're being smart capitalists, smart entrepreneurs. That's my main thought.
The dramatic rise in precious metals during 2025 surprised many, not because prices increased, but because of how quickly they did. Yet history offers countless precedents. Pressure builds invisibly for years: debt, deficits, geopolitical tension, supply shortages, until confidence finally cracks. When that release comes, price moves appear sudden, even violent. Gold and silver have always behaved this way. They do not rise gradually on a schedule. They surge when trust erodes. What looks like speculation is often delayed recognition of reality finally priced into the market.
And they knew when they set up this system that people do not understand what sound money is. And the creator of Keynesian economics, which is what our foundation is based on today, by a continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. And while the process impoverishes many, it actually enriches some. And that's why we have that K-shaped economy today. And you have to decide if that is okay with you. Because there have been over 4,800 currencies that no longer exist because they've been inflated away. Do you think the dollar is going to be any different? What is your personal experience? Because that's what we have. That is actually what we're going through right now. So the question is, will the dollar be next? And the answer is, it's already happening. When sound money became too expensive to create, they just go to cheaper money. So in 1965, they took silver out of our monetary system. And they did this by design. But here, you are now learning about sound money that cannot be inflated away. And it's important for you to understand this because not all money is created equal, and not all dimes are created equal either. So prior to 1965, we actually had silver in our monetary system. Some of you may remember that. And then they brought in the fiat money, which looks the same on the outside. It's the same size, it has the same face value, and people think, oh, it's just the same. But the pre-65 dimes are all silver. Well, they're 90% silver. Whereas any dime that was created 65 or later is just junk. There is no silver in that at all. And so what I'm trying to show you here is that this silver preserves your purchasing power. And here's how you know what I'm saying is true. Because look at this food basket. You've been to the grocery store, and even the spot silver market that you hear about, well, you can see from this basket of food provided by the Bureau of Labor Statistics back in 1913 and that same basket today, that spot silver maintains your ability to purchase the same goods and services over time, when officially we only have 3 cents out of the original dollar's worth of purchasing power left. So please, I hope you can see that the reason why the government cannot inflate sound money away is because it's used in every sector of the global market. So it has full function and the broadest base of demand.
When prices corrected sharply in early 2026, some saw failure, others saw opportunity. Seasoned participants recognized something familiar. Volatility does not invalidate long-term trends. Physical demand surged even as paper prices fell. Dealers raised minimum purchases, not out of fear, but because supply tightened. This disconnect between market price and real-world availability has appeared repeatedly throughout monetary history. When demand accelerates beneath the surface, pricing mechanisms struggle to keep up. Corrections shake out the unprepared, while those who understand sound money quietly increase their exposure.
Nothing new under the sun. If not the U.S., somebody. The situation with gold, and the reason the U.S. did was because gold was the foundation for money in those days, and the politicians were trying to control money, so therefore they thought they had to control gold and silver eventually, and they will again. Whatever is money, it's the first thing the politicians think about. We must control them. We must be in charge. And the way you are in charge is you control the money. I didn't say it's good or bad. I'm just telling you that's what the facts are, and that's what people always do.
Inflation works best when it goes unnoticed. By steadily reducing purchasing power, it transfers wealth without legislation or consent. History is unambiguous. Thousands of currencies have vanished through this process. The dollar is not immune. It is already far along the same path. The removal of silver from coinage in the 1960s marked a deliberate shift toward cheaper money. Two coins may look identical, but only one preserves value over time. Data confirms it. Silver has maintained purchasing power for over a century, while fiat currencies steadily decay.
Well, the world is better if you have independent central banks, but politicians know that too. So they want to have control. And they know that if they have control over the money, they have more power. I don't like this at all, but the facts are the facts. I'm not the only person who knows that politicians want control, and that the best way to have control is to control the money. And if gold and silver are used as money or as important sources of money, I don't like it, but the politicians will try. So have some gold somewhere else. Have some silver somewhere else.
I've heard some people say keep some in arm's reach, some in car's reach, and some out of reach. Does that sound about right?
Out of reach is very wise. But if it's out of reach, you have to be sure it's secure. Because if the politicians can find it, they will come and take it. I didn't say that's good. I'm just telling you that's the way history is very clear.
Throughout history, political power has followed monetary control. Governments understand that whoever controls money controls behavior, policy, and outcomes. Independent currencies threaten that authority. That is why gold and silver have always been targeted, regulated, or confiscated. This is not ideology, it is precedent. The lesson is not fear, but awareness. Diversification, discretion, and independence matter. Sound money exists outside political cycles. It does not depend on trust in institutions. And history shows again and again that when confidence breaks, those holding real money retain both value and choice.